it breaks down to shorter cycles. And this is where it gets bananas, which is a word you'll hear us use a few times. It's so arrogant and stupid to think that you can just simply break it down from here's a 4-year cycle and it breaks down to simple 4 years, but it does. And it has done since 2008. And what you've got here in this kind of overly colorful thing is, you've heard me talk about this, macro spring in green. That's when the economy starts thawing because liquidity is starting to rise.
Despite price oscillations, the 2024 to 2025 crypto bull cycle continues. Bitcoin, the largest crypto asset by market value, is up 143% year over year and $1,000 less than the previous cycle's $69,000 peak, but we're far from the $73,500 all-time high, which has restrained market sentiment. Real Vision CEO and founder Raoul Pal expects a bull market. Friends said on social network X that crypto asset values will rise too fast to keep up. After reaching the banana zone, the crypto market cap will triple from $2.2 trillion to 10 to 15 trillion by 2025. Pal's tweets reveal banana zone liquidity in cryptocurrency markets worldwide. Economic cycles include growth. Global liquidity has shifted since the 2008 debt reset. Pal says central banks lowered interest rates to zero after the financial crisis, establishing a new payment cycle every 3 to 4 years. This perfect macro cycle complemented the 4-year Bitcoin herring cycle and the US election cycle, boosting economic growth. Money debasement for debt rollovers reduces debt cycle anchors, devaluing fiat money and rising asset values. The theory also examines how equities, bonds, and major cryptocurrencies react to debasement. Buddy promises crypto, the fastest horse, will accelerate in banana zone. Former Goldman Sachs CEO discusses code in 2.5-hour masterclass on Raoul Friend the Journeyman YouTube channel.
Is the ISM from the past cycle predictive of the future cycle? And hey presto, it is. So now we can understand the business cycle going out into the future. And here it says, and again, Julian will talk about this stuff later, here it says that the ISM will probably peak sometime in June 2025. It won't be an exact fit. And we know where it's going. And if we know that, and we'll come on to the liquidity and how that fits together, you can see how we can kind of predict asset prices, which sounds hubristic and maybe stupid, but I don't think it is. And you'll see in a minute. So what the hell is driving this thing? Why have we got this perfect cyclicality? It's because we are in a debt refi cycle. Back in 2008, we had this debt jubilee. As opposed to writing off all the debts, all of the major central banks around the world and government said, holy shit, we've got a big debt problem. We went too far. The private sector's got too much. We need to figure it out. We need to stick it on the government balance sheet. We need to clean this mess up, because if not, we're going to be in the 1930s all over again. So what they did was a magic trick, which was make all interest rates zero. So hey presto, nobody needs to pay their interest. Imagine what it would be like for everybody here if all of your interest payments suddenly went to zero and stayed there for a decade. Well, that's what happened. And so the governments then thought, okay, right, we need to clean up our balance sheet, sort this out, make sure that we can finance all of these debts. So they restructured all of their debts into the 1-year to 5-year sector. So you can see that from the chart here, is it's all clustered. And what it did was create a 4-year cycle. And that 4-year cycle is perfect. This is not the first time it's happened either. Julian and I did some work on the 1950s after a similar situation of all the debt after World War II, and they did the same thing. Financial repression, that time was yield curve control, reset the debts, and the economy was massively cyclical until productivity eventually grew and they got their way out of it. So this has been done before. It's the 1950s playbook. And here it is again. Debase the currency and then service the short-term debts. And it's creating this perfect cycle. But even within this cycle, it breaks down to shorter cycles. And this is where it gets bananas, which is a word you'll hear us use a few times. It's so arrogant and stupid to think that you can just simply break it down from here's a 4-year cycle and it breaks down to simple 4 years, but it does. And it has done since 2008. And what you've got here in this kind of overly colorful thing is, you've heard me talk about this, macro spring in green. That's when the economy starts thawing because liquidity is starting to rise. Then summer comes and liquidity starts really moving. And then fall is when you really often get a large injection of liquidity before eventually we go into winter, which is the blue, and liquidity shrinks as the central banks pull liquidity out of the market to try and cool inflation and the economy overall. And they've been doing it perfectly.
The whole argument is based on the fact that central banks are obsessed with printing money to keep the markets and economy stable. According to Pal, the whole system crashed during the Great Financial Crisis, and the only thing that saved it was the central bank's actions. However, the real problems like falling population, falling productivity, and huge amounts of debt have not been fixed. So in order to keep the system from exploding again, central banks have to keep things looking normal for as long as they can by stepping in to help the markets with more cash every time they do this. Prices of assets go up, but cryptocurrencies like Bitcoin stand out from the crowd, as shown by Bitcoin's 143% year-over-year rise. In comparison, the S&P 500 has only gone up by 26.17% in the past year. This is why Pal has given crypto the supermassive black hole tag. It's a huge chance to protect and quickly keep your wealth, even though fiat currencies are constantly losing value. Let's watch Pal's movie again.
These debt cycles also happen to be the US presidential election cycle, because it so happened that 2008 was the presidential election cycle year. It's also the same as the Bitcoin halving cycle, because Bitcoin was 2008. So we've got one mega cycle that rules it all. It's the most powerful cycle we've ever had. And most people can't see it or don't yet understand it. And it makes them be wrong in their understanding of how everything works. And you can see it, people trying to explain things on Twitter without understanding what really moves things. But when you understand that same grid of colors, the same seasonality, understanding that each of these was an increase or decrease in liquidity, well, when you look at the NASDAQ, and we've proven how NASDAQ is correlated, NASDAQ breaks down exactly by the seasons too. NASDAQ does well in summer, which is we're in now, or just transitioning into, but it does really well at the end of the cycle in fall. It tends to have a momentum. It's kind of a reflexive process, which really builds on itself, because in fall, earnings are at peak. So equities are driven by earnings plus the investment cycle. People have got more money to invest. So fall, so that would be equate to 2025, should be really strong for tech and strong for this year too, which is summer, coming off green, which tends to be very good with spring too. So this is this exponential age tech trend that I talk about. But crypto, same cycle. This is the crypto cycle. We can call it crypto spring, crypto summer, crypto fall, crypto winter. It's the same as the election cycle. It's the same as all the thing. The presidential cycle. They're all the same. So crypto tends to do decently well in spring. The anomaly was 2020 because of the pandemic. It did very well in spring, less well in fall. Generally speaking, like the NASDAQ, fall is when the real price action starts. My guess is we'll probably be more similar to 2017, 2013, this cycle, because we're not jamming excess liquidity in early, it'll accumulate over time. But anyway, now you understand the cyclicality, why it happens, based on liquidity. You understand liquidity itself and why liquidity is there. What its job is to do is debase the currency to pay for the debt. That's making the rich get poorer, the poor get poorer. It means your wages don't go up as much as the cost of housing. It's all described within the Everything Code. But the Everything Code goes one stage further. Because it's so cyclical, we can forecast further out as well. So we showed you the ISM cycle and how it's forecastable, but we can forecast liquidity too. And if liquidity is the driver of assets, guess what? We can forecast assets. That was the point when Julian and I kind of looked at each other and went, this is really, truly crazy. And it's been working. And I'll come on to some of the caveats on that in a bit. But let's forecast the liquidity cycle now. Let's go back to the chart we looked at before. Well, we can forecast the business cycle. The business cycle, the Institute of Supply Managers survey, is the best general business cycle indicator. And we can now put one cycle, the previous cycle, onto the new cycle and invert it, and you get this. You get the repeating cycle. So that tells us, forward-looking, the business cycle should be going up now. There's a lot of information in that, and Julian will explain what that means. But basically, if you know the business cycle is going up until June, cyclical stocks will do well, commodities will do well, all of the things driven by the business cycle, and earnings will do really well. Technology and crypto driven more by liquidity as well. And we'll come onto that in 1 second.
The groundwork has been laid for the cryptocurrency industry to continue growing and changing for decades to come, including big price increases every 4 years. We are currently experiencing a dynamic change from financial spring to summer and full of soaring prices. As central banks try to keep their economies stable and avoid potential crises, the global money supply usually grows by a lot during these cycles. It's clear that the cryptocurrency industry is at the forefront of this change, thanks to the explosive growth in the money supply and the fast development of many new technological platforms. What do you think about Raoul Pal's predictions for cryptocurrencies, tech stocks, and the economy as a whole in 2024 and beyond? Please share your thoughts and predictions for your favorite crypto assets in the section below. Also, don't forget to like this video, subscribe to the channel, and turn on post notifications to get more videos like this. Thanks for watching.